All right, let's talk about Itochu, one of Japan's huge general trading companies. Now, while a lot of their peers are really struggling in this tough market, Itochu isn't just getting by. They are absolutely smashing records. So what's their secret? What's the playbook here? Okay, let's just get right to the headline number. Get this, 705.3 billion yen. That is Itochu's net profit for just the third quarter. That's a company record, by the way. They've blown past this 700 billion mark for the first time ever in Q3, and that already puts them at 78% of their entire full-year forecast. I mean, they're just crushing it. So that brings us to the million-dollar question, or I guess in this case, the 705 billion yen question. In a market where competitors are getting absolutely hammered by falling resource prices, how on earth is Itochu thriving like this? Well, let's break down their three-pillar strategy. Okay, so the first pillar of their success is a really smart strategic pivot. They've moved away from the super volatile world of natural resources, and instead they built what you can only describe as a non-resource powerhouse. And the scale of this strategy is just incredible. I mean, look at this. A massive 88% of their profit now comes from these non-resource sectors. That's a record high for them. And it creates this super stable foundation that just isn't at the mercy of wild swings in commodity prices, like oil or iron ore. So what does non-resource actually mean in the real world? Well, it means brands and services that are basically part of our everyday lives. We're talking about FamilyMart convenience stores, the high-performance sportswear from Descente, Dole's fresh fruit, and those essential IT services from Itochu Techno-Solutions. And that right there, that really gets to the core of their first pillar. By focusing on businesses that face you, the consumer, they've built this incredibly resilient, predictable business model that's fundamentally protected from those boom and bust commodity cycles. Now, pillar number 2 builds directly on this foundation. See, it's not just about what they invest in, it's about how efficiently they manage all that capital. And this is where their obsession with efficiency really shines. So, for anyone who might not know, return on equity, or ROE, is a super critical metric for investors. It basically answers one simple question. For every dollar I invest in this company, how much profit are they actually making? So a higher ROE means a much more efficient company. And Itochu's target? They aim to maintain an ROE of right around 15%. And let me be clear, that is an absolutely top-tier figure among Japan's trading giants. It just screams exceptional management. This kind of high efficiency doesn't just happen by accident. It's the result of this very deliberate corporate philosophy they call the Brand New Deal. And it's all about being proactive, having hands-on management, and just refusing to let any asset sit idle. And here's how they do it. It's this dynamic cycle they call asset recycling. First, they sell off assets that aren't performing well. This year alone, that generated a massive 132 billion yen in profits. Then, and this is the crucial part, they don't let that cash just sit around. They immediately reinvest it into new, high-growth areas. It's a constant churn that keeps their capital working at peak efficiency. And that brings us to our third and final pillar. This is all about what all this success actually means for you, the investor. And wow, it's a powerful story of commitment to shareholder returns. I mean, this chart really says it all, doesn't it? Itochu is on track for its 11th straight year of increasing its dividends. It's a core policy they call progressive dividends, and it sends such a clear message of stability and reliability to anyone invested in them. And, that commitment is backed up by a hard number. Their total shareholder return ratio, that's the chunk of profit they give back to investors through dividends and buybacks, is a very strong 52%. They use this powerful two-pronged attack. So on one hand, you've got that reliable, growing dividend, and on the other, they just announced they're buying back an additional 20 billion yen of their own stock. And these buybacks reduce the number of shares out there, which can help boost the stock's value for everyone. And they've made one more smart move to bring more investors into the family. A recent 1-for-5 stock split has made the share price way more affordable. It basically lowers the barrier to entry for individual investors like you and me who want to own a piece of this incredible story. So let's put all these pieces together. What is the core takeaway from Itochu's amazingly successful strategy? What's the bottom line here? Well, it really boils down to these 3 core strengths. You've got a resilient foundation built on everyday consumer spending. You've got an incredibly efficient engine driven by that 15% ROE target. And you have an unwavering laser focus on rewarding investors. This quote from the company, it just perfectly captures their whole vibe. Earn, cut, prevent. It speaks to this culture of disciplined growth, being super efficient with costs, and always managing risk before it becomes a problem. It really underpins everything we've talked about today. In short, Itochu has built a seriously resilient business model that's just designed for the long haul. Of course, this explainer isn't investment advice. You've got to do your own research because all investments carry risk. And all this leaves us with one final and I think fascinating question. As the commodity market stays so unpredictable, is Itochu's strategy, this amazing blend of consumer focus, high efficiency, and shareholder rewards, is that the blueprint for the future of all trading companies? It's a question the entire market is going to be watching very, very closely.